Hi, and welcome back to yet another episode in Robert School of It. The topic of this episode we have chosen is extreme Pareto Principle and 52-week high strategy to make high return in the tune of 115 25% came when my student asked in the class, can we have a strong strategy wherein we can pull many of this return securely or without risk? The word securely or without risks in share market doesn't apply. But that was a very good question asked by my student. Uh, then I thought how to answer this question. Then then went to my drawing board and really could find out. In my last experience of 24 years in sales, I worked in non MNC companies uh, like Pidilite, Marico, Airtels, and Vodafone. And I found why these are leaders, why these companies are still the leaders in last 25 years plus, because they have developed some mechanism wherein they can be the leaders. They have very strong four, five pillars in sales, marketing, HR, finance, and this. And based on this, I decided and I really got found. I did analysis for last 2 weeks and found out the stocks which are making 52-week high, their win ratio is absolutely high as compared to stocks which are little bit low. Because in this competitive market, you will absolutely agree with me. No company will leave an inch to his competitors. So with this concept and with this with small ground, let's get started. The first stock, the first stock which comes in the radar is Tata Steel. Uh, those market to in market capitalization. So Tata GSW Steel is a market leader and is making a higher high. This stock has taken a correction. So we want to enjoy a correction. The theory goes very simple. A stock which is rated a 52-week high will bounce back in the vicinity of 5 to 15% depending upon the nature of the stock and depending on the sector. So this is a stock which has taken a deep correction. So we want to enjoy the correction. Let's see its fundamentals. The P ratio is absolutely high compared to industry P and average P. The quarterly result was also in variance that was not in line with market expectation. But the P is becoming a concern. So I found a reason why the P is very high because they're absolutely invested in outside India also. That's one of the reason the P is very high as compared to industry P. Now, if you see the chart in daily frame, this is a daily time frame chart of Tata Steel. You can see what a correction. The stock had corrected from this all-time highs of 190 plus to 140. So 50-point correction. That's a huge correction. And if you see the stock is trying to make some kind of W pattern. So let the stock correct and we bridge the gap also. If the stock gives a closing above 156, 157, then we can buy the stock for a minimum target of this is a condition zone of 170, 180. So this you can add. So 155 to 180, you can have minimum 15 to 16% return. And this stock has a tendency to give good results in Q2. So that is also you can see if you do the time analysis of the stock, time and price analysis. This stock has a tendency to give historically gives a good result in Q2 as others company. So we can encash it. And number two and number three is the stop loss. The stop loss, the target is of what 25 points, and the stop loss is of 10 points. Not even 10 points. You can have stop loss at 150 also. So huge ratio. 5 point stop loss and 25. 1:5 is a risk and reward ratio. So one can bet the stock. And why we have chosen this stock because this stock has touched a 52-week high income. As I stated initially, stock touching 52-week high is not a matter of, it's not so easy because no one will give an inch. And if you see historically, if you get this sort of correction, see all the EMAs, what are these lines? You can ask me, what is this line? These lines are nothing but the EMA caution. What is an EMA? Exponential moving average crossover or Fibonacci numbers have taken. This is the Fibonacci series 5, 8, 13, 21, 34, 55, 89. What a lovely correction. And the stock had moved in the vicinity of one range of 120 to 190, almost a vicinity of 55, 60% gain in less than a year. So this is number one stock. We can buy it. Now I've done some deep analysis to find the relation between P and the price. Let's see. If you see the time chart in a yearly time frame, this is a yearly time frame chart, and the stock had plunged. P plunged in the recent into one, and this is where we got a typical dozy can do. This is the time should have bought it. No issue. The Tata Steel 12 months P is negative. So this is the right time to buy for the fundamentals of stocks. We can buy it. So, so that's why one of the reason I took this stock for long term investment. Number two is Aditya Birla Fashion Retail. We are right now in the shopping. We are entering into the festive season. The shopping, we can't neglect the word shopping, right? And we again historically this stock gives a good returns in quarter two, so we can encash this. And this is a market leader in its segment, distinct market leader. We say clear cut market leader, and the next is Shopper Stop, and this is absolutely cash company. And the let's see his chart. This chart from a high level of 345, the stock has taken a correction. Loss taking middle 328. So we can buy the stock for the correction of minimum 0.56%. And if you can wait for Q2, which the quarter is stock had tendency to give good results, then we can say minimum 5-6% for more worth it. So a short-term correction is 5-6%. For long-term, we can able to wait. The stock can give a minimum 360, 370. This I'm not saying this is all GANs for figures in tech. So the next target is 360, it costs 345. Then it will go to 375. So well, if you're able to wait, and if you don't have the patience to wait, then you have a minimum target of the year 340. So that you have minimum 5% in your hand also. So you can play the stock as per your appetite. This we got a strong good crossover of RSI 14 and kind. Next stock is Maruti, my favorite stock and our favorite stock. Market leader, distinct market leader, you can see. No one is there in vicinity. And slowly M&M is catching it up. And the P ratio is below industry average. So this is a good time to buy Maruti. And the ROC is a distinct number one. So if you give 1 rupee, it will give you 21.8 paise. So that's the meaning of ROC. Let's see the chart. If you jump into the chart, you can see what a correction the stock has taken. It broke the resistance of 13,000 and it made an all-time high of 13,600. Now it made a strong base in the vicinity of 12,000. And if it sustains in the vicinity of, sustain the vicinity of 12,600, then no one can stop us to in a target of minimum 3,600. Again, in first situation, we has a Diwali season. It has a historical. If you see the chart, time and price, the equation, the Q2 becomes a very good crucial quarter for this company and this things for sector also. Again, the stock is yet to get the momentum. This is lifetime to buy. So if you are if there's one can buy this stock with a stop loss of 1,200. So what 300 point stop loss and a target of 1,200 kind of thing. So 1:4 ratio, 1:4 is a reward, risk and reward ratio. This is a good open with ratio. Why you can track. So let's see next stock. The next stock is Astral Industrial. So this is one of my favorite stock. This stock became very famous in IPL 20. It was a prime sponsor of Indian TV, Indian cricket team also, and played a vital note in giving a number of ads, uh, getting the number of ad slots in Indian T20 World Cup. So let's see. This stock has plunged. This stock from its all-time high of 540 had plunged to 195. This stock, by the way, is number two in the sector. So the market leader in this stock is Astral, Supreme Industries. And this is number two. It's catching up Supreme Industry, but the P is very, very high compared to the industry P. The industry P, again, here is around 37. Over here, the industry, its P is 95.3. So that becomes a challenge. But if you look at the fundamentals and technical of the chart, this is a weekly time frame. This chart is trying to hold for 1, 2, 3 weeks, 1, 2, 3, 4 weeks. So this will act as a small, huge support, 1,850. And this chart is trying to make some kind of W pattern. So this makes a W pattern When a blue pattern will get completed when the stock gives a closing above 2000. So one can buy the stock. If you're a risk taker, then you can buy the stock in staggered from here itself, 20, 30, and 50 in the ratio of 20, 30, and 50. And if you are a technical indicator kind of buyer, so you can wait the stock to have a closing above 2000. So very, very small timid stop loss and a target of 2450. And if it moves out, then we have again, as per GAR, we have a 2800 kind of stock. If you have the patience to hold the stock for 2 quarters, and then we can see a minimum 40% return in the stock. Guys, you heard it right. This is a minimum 40% return, provided it gives us closing about 2000 net worth. Since it's a 40% return, so I've given to try to look at the chart at different angles. So this is a yearly time frame. This is the yearly time frame. For how the stock behaves technically. There's a tweezer top. What is a tweezer top? The stock will go up. The two candles, these are two identical candles making a tweezer top. So this is absolutely a tweezer top. And so not absolutely tweezer top, but technically tweezer top. All the wicks, the all-time high, and all the wicks, they have touched all-time high and launched back. As I said in my weekly time frame, there is a huge support in the vicinity of 12,000 to, 1800 to 1850. So one can look at this level also. This guys, these stocks are in FL. If something goes wrong, you can hedge it. So nothing, you can't get, then no need to panic also. So these two levels, this zone will act as a huge support for this stock. Uh, same, uh, Same in daily time frame for this, provided that the swing which had made, it has opened the swing. So generally it doesn't take the swing also. And this is a congestion zone. This is an historically been congestion zone of 2200. See, it broke the congestion zone and moved out. So this will act as a huge support, as I said in the previous slide also. This again I proved in different angle. So what I'm trying to show you, first, we are looking for the M pattern to be completed. Once the M pattern gets completed, then we expect the stock to move on. And historically, we see the time and price equation and followed by Gann square of 9 calculations. Then the stock has a potential to give a 40% return in minimum 2 quarters. So these are the two time frames I've plotted, a weekly time frame and daily time frame. Both the time frame I was saying, see the congestion zone. This is a huge congestion zone. So stock has a huge support in the vicinity of 1860 till 2000. So as I was saying, if the stock closes above this 2000 and it's able to break all this EMA, then we need a thrust and a move. As of now, we have not got a thrust. We got a small thrust. The RSI is below 30 also, below 50 also, it's below 45. So if the RSI moves out from 50 and in the weekly also we get a crossover, then you can increase your position size in this particular count. So why you have taken these stocks? These stocks had May 52-week highs and they are the leaders on the respective sector. So that these two are confirmed. Now, can ask me, Robin, why you have not taken RSI 30? I did analysis for last 2 months. I can prove it mathematically in Excel also if you want. You can call me. I have shared in every slide, I have a number. The stock which makes a 52-week high, the potential of getting more return on those stocks are very, very high as compared to stocks which are getting very low. Since I've worked in 24 years in sales, so I know if you attend a leadership, it becomes imperatively very, very harsh to lose leadership. Then you have to be absolutely fool, or you have done something wrong in the market strategy, or your product, something like that, or you lose something, or you have done something, or you are a competitor in such a niche that you've lost the market. It's very, very harsh, very, very harsh. So stock making 52 high, sustaining and retracing, this is a good pattern. Historically also, these are the levels we can buy with a minimum price. Guys, this is my disclaimer. Please go through it. And this is what we do and what we teach in Robin School of Traders. We try to teach you simple strategies while working in mobile, tabs, desktop, or laptops. You heard it right. We can work the strategy which are designed. Stock market is learning. So we keep on learning and keep on innovating and become back testing. So I've designed a strategy while working in the market or work while traveling also, by using a simple mobile and make minimum 3,000 to 5,000 rupees. Guys, I'm sure you must be liking my videos. If you like my video, if you enjoyed the video, do subscribe to my channel. Really motivates me. Thank you.